data. I was actually away in Greece for a whole week, sailing through a few islands with our friends and family, which is pretty awesome. So I haven't been trading since Thursday, about a week and a half ago. It's Saturday right now, so I want to review last week. I think I might release this video after I release the one before it, which outlines and goes through in detail the order block strategy. I have the rules here for my order blocks that I've looked up and found that they had an 84% win rate over, I think it was 110 order blocks of data over 4 months. So I'm going to put that into account. I'll explain it quickly, and then I'll get started. Pretty much just going to start from the daily down, but I'll go through the rules. So must be an extreme or a flip zone, must lead to breaker structure or chalk, must leave inefficiency / imbalance behind, can be on the 15-minute time frame or the 5-minute time frame, must be unmitigated. For my back test, less than 45% filled. Must sweep liquidity, so pretty much just like sweeps and lows. That can either be present on the 15 or the 5-minute time frame as well. And in general, we must not have imbalance or above or directly below. So pretty much where we put our stop loss on the order block, we don't want imbalance there. I potentially will have a look at maybe covering the balance of my stop loss, or I will put my entry in the balance as well. So I'm going to look at how the price comes into an order block that has imbalance, where my stop loss would normally be in terms of the strategy. If you don't understand any of this, look at my last video. It will explain everything into detail. Really good video. So enjoy. I'm going to get into it now. Start with the top-down analysis. I will move this to the side. Actually, maybe I will hide it. Okay, so on the daily time frame, Euro USD. Quickly, I'll go through the indicators I use. Session indicators. Just pretty much shows you the Asia, Australia, London, and USA sessions. The next one, fractal balance. It shows me the imbalances highlighted in blue here. I think I will change that color quickly. Okay. And then this one I play around with from time to time. I'll use it today. I like using it for my videos just so it speeds things up. It's like a multi-time fractal break of structure indicator. Sometimes I agree with it, sometimes I don't. But what I'm going to do is I'm going to use it today because then it's quickly easy to mark up my structure. And yeah, it's pretty much what I want to see. So let's get going. I'm going to write it. I'm going to draw it on as well. Here we go. Daily break of structure was the last one where we had a body break. Only wicks. So then this is the last major low that led to the break of structure at the high. And this is our last high. So we pretty much had what we had here. What we would have shown is this last low that led to this sweep of the highs was broken with a body break, creating a daily chalk. And that daily chalk is pretty much played out from what I can see, at least. So we're looking to, if you look at any of my last videos on Euro USD, we were watching this extreme daily order block or daily point of interest. So like we said, we're on the extreme. It swept liquidity. It pushed up with imbalance, broke structure. And also one that we're quite interested in was this one here as well. It's a flip zone. However, it didn't play out. So after the chalk as well, we can assume we're going to move into the discount zone, which we have. And we've then had some daily chalk and some internal daily breaker structure moving us up. And essentially we're looking to break this high by the looks of things. Let's see if there's anything else on the daily we might want to add. We had like a little internal chalk here. And we had like a confirmation of this internal daily structure, then a nice big push. We had like mini internal break here. However, we only ever got a sweep here. So we haven't had a close below this. So potentially we're pretty much just looking at, may have, let's have a look. Hold on. Actually, no, we did have a little daily chalk internally though. So let me see where we want the golden zone. Looks like we've retraced back into it now. So potentially from here, we can be looking at longs to move us up. So I'm going to go into the 4 hours because this is mainly the daily structure I'm interested in and see what we can find in the 4 hours. Okay. I'm going to use this for the 4 hour structure because I don't actually agree with it. But we'll zoom in a bit and see what's happened. So I'll play it out from here. Pretty much we've tapped into this daily point of interest, kept moving down. And then we finally got a big change of character on the 4 hours here, with a nice big close above here, and pretty much the flip zone of the 4 hours is what held. And then, so let me just tag that so everyone can see what I mean. This is what I would call a 4 hour chalk, because we're in a 4 hour downtrend, and then we finally get a big break and close above these highs. And then we retraced into this nice point of interest that left imbalance, swept liquidity, and broke structure. We held it, we've pushed up, and hold on. And we have once then again broken structure. Which then, you know, in terms of our odd box we're looking at, this would have been sweep liquidity, got imbalance, broke structure. Looks like we didn't actually get a full pull back into it, but this is where we would have been looking for 15-minute areas of interest. But since then, we moved up, quick sweep, and we had the break again. Another 4 hour break. You get the picture, another 4 hour break. We're moving up bullishly on the 4 hour. Another 4 hour break. And then we ended up moving back with a 4 hour chalk, as we can see there. So what we're looking at on the daily, let's see why we got this 4 hour chalk potentially. Probably a good reason for it. Okay, let's see. Nice daily order block here, unmitigated, swept liquidity, pushed down, there'd be imbalance still left over here, led to this chalk here. That, yeah, very nice. Okay, so let's mark that out. That's what we would have been looking for, this 4 hour chalk. Obviously it's already occurred and it's already happened. So we move on. So potentially we've rejected this daily. This is sort of like our daily move up. I want to see that, had that, push, sweep. This is like a daily leg. We had the 4 hour chalk. We've got this area here, right on our daily. This is the last sort of break of structure before the chalk. So, and it's right on our daily equilibrium, or, you know, our golden zone that I like to say. This is kind of new that I'm experimenting on the high time frames, because you don't always get back to the 50%. So I've got a golden zone between the 45 and the 55, which I just like to be aware of when we've tapped back into the 45, because it's, you know, we don't always hit that 50% line on Euro USD on the 4 hour or the 15. So I'll mark that 4 hour point of interest there. All the rest, this is unmitigated as well, but looks like the imbalance has pretty much been filled. There's not a lot I really like. Maybe this one as well, with this line liquidity here. But as we have now tapped into this one slightly, I feel like we could still mitigate it further. So, you know, we could sweep these lows, but we'll also consider this one unmitigated, cause chalk. So we could see reaction out of here as well. So let's mark that up. And so pretty much what we had here is a 4 hour break of structure. So essentially, realistically, we'd have to, it's not really that clean here. There wasn't a really clean flip zone, which I would consider here. This is all internal. Potentially, you know, this, let me see. It's mitigated. Slightly mitigated. This could be, you know, even though it's not the extreme, that was mitigated, that's mitigated, this is mitigated. This is slightly swept. I don't know why I have that on. It's probably easy to see this. You know, it's still, I'm going to have to look a bit on the 15. So I will consider this one, that's not what I want. I will consider this one the most extreme unmitigated order block that swept liquidity on the 4 hour. You can't see the imbalance there, but we will find out if there's if it's valid. You know, we do have a little 4 hour chalk, you could say here. However, that would really, because we're 4 hour, we've just broken 4 hour structure coming down, and we haven't, fully mitigated this. I would really probably only be looking for longs into the discount area or into this area. So that's probably not valid anymore. So yeah, let's move on to the 15. Okay. What do we have on the 15? Let me see. Maybe I'll turn back on this. 15. We did break, push up. Yeah, I pretty much agree with that. Similar to the 4 hour structure, there is definitely internal structure we could run with, if you were wanting to trade everything. But this is the main low. That could be internal break, which we do trade. I'm not going to mark all that out because we don't really need to anymore. Okay, have that. Oh, look at this. That's a very nice high. There's a slight imbalance here. But now that I'm seeing this is on New York here, huge push down inside this 4 hour PLI that we talked about. There is a sweep there. Okay, there is a bit of liquidity up here. It's a tricky one, but it's just such a nice area. So especially with all this imbalance. So that one was mitigated. This one here still wasn't. Let me zoom in a bit so you can see what I'm marking out. So that you see the extreme one has been filled 50%. So that's the next one down. So much imbalance below. So the interesting, we haven't actually tapped into it just yet. But yeah, the 15-minute structure on this indicator I agree with. So let's have a look from there. We're expecting this, sorry, let me mark it out because we had 4 hour breaker structure. We're expecting this to be our 4 hour low as well. Sorry if that's a bit confusing, but we're expecting this to be a weak low. So we're expecting this to break. So yeah, perfect. And okay, 15-minute strong high is also a 4 hour strong high. So that's pretty nice when you get confluence like that. 4 hour high. Strong. Okay. Let's have a look. So technically this is an extreme that we're looking at anyway, because it did break this structure and it's the extreme point of interest that broke that structure. And, took a lot of this liquidity, swept all these liquidities low, pushed up. And must have been some news there. Let me just turn on settings. Hold on. Need to make sure the news is on. Events. Common events. I'm not going to put it. Oh, come on. Must have been, was this Friday? No, Thursday. Fed Powell speech. So yeah, maybe this was sometime in his speech. Whatever he was saying, sent it very fast down on the New York Open. So interesting, 8:30 a.m. Anyway, maybe the timing's wrong. So now we're moving up. So let's mark this out. This is an extreme. We do have a 15-minute shock here, but after a 4 hour break of structure, we've already moved super fast into it. Let me see if we're already in the discount zone. Yeah. So I'm not really that comfortable taking longs from here because we're in a 4 hour downtrend now with 15-minute shock. We've already retraced to the discount zone. We've only barely mitigated this 4 hour. Let's have a look if there's any imbalance underneath these wicks still left. That would be quite interesting to know. Might delete this. It's just in the way a bit. Let's see. Yeah, look at that. Let's pull it across imbalance from here to here. Let's see if it's all been filled. No. Okay. I'm going to note that down. I'll pull it down to where it actually, okay, it's a tiny bit of imbalance, but from my studies, this imbalance right below some, especially equal low wicks like that, in a 4-hour point of interest could end up being swept. So yeah, we're pretty much looking for shorts from here. Let's have a look. It's right on the 5. So, oh yeah, I forgot to explain that as well. How I enter off my POIs is I've made it a bit more systematical now. I've studied the backtesting data and made it systematical. So if your POI is 5 pips or less from top to bottom, you enter on the edge. Or I enter on the edge. I'm not telling you how to do it, test yourself, everything like that. But what I've found is if your POI, your 15-minute POI is 5 pips or less, enter on the edge. If it is between, I think it was 7 and 5 pips, or 8 and 5 pips, I think 7 and 5 pips, enter on the 22.05. Here, let me draw it up. There's another one I want. Anyway, OBs plus 4.5. Yeah, so what you would do is if this was, say, 6.5 or 7 pips, you can see the number there when you have it, you would enter on the 25. If it is 7 to 10 pips, you enter on the 45 line, which I've got there. If it is, any more than 10 pips, have a look on the 5-minute time frame, see if you can refine to a 5-minute order block and do this all again. If you don't want to refine, then just probably leave it on the 45 for anything bigger. But that's what I've noticed, that you can definitely get better entries once you get these big 15-minute POIs. You can refine it to the 5-minute order block and do the same thing. On the edge, if the 5-minute order block is 5 pips or less, on the 25, if the 5-minute order block is 5 to 7 pips, and so on. So what do we have here? So on 5 pips, I still put in my 0.5 of a pip stop loss on the top of it, just for spreads, but I don't include that in the calculation to start with. So here we are. Realistically, we're targeting the 4-hour low, 17 trade. We haven't quite tapped into it. That's with this imbalance directly above this, I wouldn't really be that keen on taking that trade. There could maybe be some internal setups, but we've got a little sweep here. I guess if we close below this, we could potentially look at maybe a little scalp from this area down, but this is getting a little bit more high level advanced sort of stuff, because what I'm doing is I'm expecting us to come up here, but we do front run my target sometime. We've left huge amounts in balance here. It's very bullish. So if we do reject from here, potentially this is already the high that's been put in. So we've got, this is mitigated. The only, I'd need a break and close below this, because this would show that we've broken like a major low that mitigated all these. Left in balance behind, swept liquidity. Once we get this low, I would potentially look at shorting from here, but my target would be around this discount area, because I know we could easily touch that, rebalance, and then head higher, and maybe I could still get my short from here. So let's see. We're in we're on Friday, so I need to put this down to 1. 10 would be going crazy. But I hope that makes sense. This one's a little bit more advanced from knowledge of the market structure, and sort of, I'm expecting a rejection from here to go down further. So, if I want to just wait for this, I wait for it. If I want to, take a bit of a risk entry in case this does hold, but I'm going to have much more reserved targets, because I know that we haven't tapped into where I actually want to take a short from. And yeah, if that sort of makes sense, hopefully. Let me zoom in so you guys can actually see that a bit better. Okay, so pretty much, I think we do have there we go. We had a few wicks here and there, but in agent session, we've got this close below. I would probably mark it up like this, close below here, and say these are just sweeps. So this was when the actual close was below in this candle. And so let's have a look at what the size of this is. See, okay, so this is 5.4. We want to 5.4. We'll add our, okay, so we want to, it's over 5 pips, between 5 and 7 pips. We enter off to 2.5, and we still add our 0.5 onto the stop loss for spreads. Nothing worse than doing equal highs and you get stopped out and then it goes away. And pretty much we target the premium discount area because we know we can pull back and then we head higher. So we're reserved on this one because we haven't had like a really nice high. This is pretty aggressive trade. We're still in that. We still want to take this one up here as well. So the thing is, I want to explain as well. You see, okay, this we had a little sweep of the highs. I'm pretty sure that would be in Sydney session. Let me put it on. Yeah, open a Sydney. Oh yeah, something like that. Sweeping. And this is pushed down, sweep, sweep, sweep. The lows, and we've taken the lows here. The reason I'm not taking trades out of here is because we have imbalance and rest and liquidity all above, and that's something you really take into note. Potentially, if this, let me have a look. See how you see this little sweep here? That could almost be a valid order block, but that's very aggressive trading, especially on Asian session, because what they did is push low and then left all this liquidity behind up here, which gives me actually a bit more confidence in this one. We've just touched it, so we're not in, but maybe that was all we could get. Filled the imbalance and go, which sometimes happen. It's pretty unlucky, but that's just how part of trading works. Oof, I wonder. Oh, that is very unfortunate. Looks like we probably wouldn't have got a tag there. Obviously, you can look at your brokers depending on how what they offer and the spreads on them. But in this case, it looks like we would have missed out potentially. If you wanted to, it was only 5.4 pips, so you could even have had it on the edge and you would have been in. But that is just the way the cookie crumbles sometimes. So I don't think this one's coming back for us. Let's see what happens here, and then we'll go from there. The zone. I'll remove this here. Let's pause that for a second. Okay, so we've got our discount zone here that we were talking about. Give us a second. Dog's barking. Sorry about that. Dog was barking. I had to figure out what was going on. Let's go. Where were we? So we would have hit our target. Pretty unfortunate we didn't get tagged in. That's pretty sad. Anyway, we've now retraced there. This is still what we're looking for. Okay, we've got our breaker structure, there. So, some people will be looking at this. However, the fact that, this is still left behind, we haven't put in, we haven't got a really nice chock on anything in this leg. That's sort of just like a retracement here. I think we're going back up. So realistically, if you want to be super aggressive, you could, look for longs out of here. There is potential as well. Now we've retraced into this after we've got 15-minute chock. In the bullish sense, we have already retraced into the discount zone. However, as we're expecting to come back into this level at some point, and this could just be a retracement because we haven't put in a major chock, anything. If we get a close above this level, I definitely would look for longs into my shorts. So let's go play that out. Okay. Especially considering when you think about how the market moves, there's that break. So we pretty much had Asia push us down, took some of this leftover liquidity from spread hours and Aussie Open, rejected off our nice sweep on New York, pushed us down. London Open pushed us down even further, and now wants to try push us up to collect some of this liquidity. So let's just see. We've got this one's mitigated. This has been, I guess you could almost call this, but I'd say it's mitigated. We've got this 15-minute here, which is what we'd class as a flip zone. It's not perfectly obvious that we've swept liquidity in here, and that's one of our things that we want to look for. We've got imbalance, easy. We've got chock, break of structure. It's the last area of consolidation that broke the break of structure. The other extreme would be here, but it's mitigated. So what I'm happy to do at this case, when we've ticked a lot of the other boxes, I move on to the 5 minutes, which I haven't really showed you guys that much because I don't want to confuse you. But if we have an obviously sweep of liquidity on the 5 minutes, then I'm happy to move on. So yeah, we had this push, we had a low, this sweep of the low, and then that's a push up. So we've got obvious on the 5 minutes. So that ticks all the boxes for me. No imbalance below it. I'm going to set up my order block here. Oops, sorry about that. So I guess we see, depending on how we see the market, how long we want to hold trades. I'm actually wanting to hold trades to fruition now because I'm very confident in my strategy. And, I was closing out overnight and all that sort of stuff if they didn't play out. But, I know there's a lot of money to be made holding trades overnight. And I can because I have a swing account. So, hold on. Still getting used to it. We have an order block of 4.1. So, we will enter on the edge. Because it's under 5. And then we pull our 0.5. Obviously, you could be conservative and be like, okay, maybe we see a reaction from this, and we go down further. Fair enough. It's very conservative considering a 4-hour downtrend, and we've retraced. So I would say, if I wasn't so, let's see what that is. 5.78. Just this high, just liquidity. So there wasn't a shock. Okay, there was a wick here, but we rejected out of this little point of interest there. Maybe that would be a level that I would like potentially move to break even or something. I don't really have a good rule around that. I pretty much have a rule that at 3R I go to break even, but I'm still backtesting that right now to see the data on it versus just like holding to fruition. So we've got this, swept some liquidity, did create a little bit of EPI, so it's swept liquidity, nice imbalance, break of structure. Not somewhere I'd take a short out of, but somewhere that is potentially a good take profit. However, I'm still pretty invested in this area up here. So let's see what happens. We don't know if we're going to get taken into the trade. There we go. Potentially there was an opportunity on the 5-minute here, which I was trading quite aggressive before. We had this. We had this consolidation with a lower high. And if you went on the 5 minutes, so when it's one candle consolidation, so I'm happy to go on the 5 minutes. So this is just like extra bonus for you guys. I don't show my 5-minute trading much because I want it to like people to understand the 15-minute and just stick to that. But having this idea of lower time frame, what's happening on these consolidations really makes a big difference. So we had a single candle consolidation on the 15 that created a lower high. So it's like, okay, that's almost a valid order block on a 15. So what does it look like on a 5-minute? Okay, yep, lower high. There we go, lower low, lower high, lower low. A push up and then a big sweep of these lows. Fill the imbalance, tagged us into this first trade. Create a breaker structure on the 15-minute and the 5-minute, obviously. And we look back, we've got everything that, we're liking, and we pretty much would go from here to there because it's not clear. Or if you wanted to, this is where you can just enter off the 5-minute if you want to. But, I suggest keeping it on the 15 just because it makes life easier. It makes it easier to get data, and you just use the rules that I gave you in terms of your order block entries. So we've got to find out how big this area is. Oh, what am I doing? Let's sit on the edge. 8.7. So this is where we would go to a 45. Probably left behind by looks. And with the 5-minute, yep. And I think it was the same. It's a bit more risky. Let's see. Oh, American Open. Okay. There we go. Another area breaker structure. We'd have to look on, it did have a high, but it had a nice sweep of the lows on the open. We'd have to look on the 5-minute to see what it looks like. Small amounts of balance below. Didn't sweep all this liquidity. Nice tap in. For me, I don't think I would enter off that due to the fact of this tiny bit of balance below. And, depends whether I will mark it up actually. Because it does tick the boxes on the 5-minute. Short. Let's have a look. How big is this? Oh, no, I was not sure. Sorry, guys. 9.6. Okay. We're going to the 45 line. Whatever. Same target. This one's deleted. Never got filled. We're in this one still. Oh, there. Oh, all right, pause. So you look at this. Did get a little bit of reaction there. But we have to think, if New York had have cleaned up all these lows first and then started pushing up, I potentially, would have been maybe a bit more strength in this one. But because it's just moved straight up, it means it's hunting all these stop losses to try and push the move back down. Well, look at that. We would have moved that across. We're in this. This one we're deleting. That's not something we're interested in before. We've taken all this liquidity. Everything. So we're going to need a hunt. This is where we're looking to short from. We're in this short. We delete that. Never got tagged in. We move this stuff across. Valid, as I said, is just how it goes, We don't always get tagged in. We'll keep it drawn on just so you guys know. This one, beautiful 10R. Absolutely beautiful. Yeah, see, that's your flip zone. check the 5 minute. It has a sweep there. Even in balance, happy to do that. In 5 minute, you can check if there's imbalance below. The 5 minute 15 for entries, just I found it really is nice. Super unlucky here. Could have been, I think it was 7R, but this 10R. What a nice trade. Let's move this across. We're in this now, where our target is a weak low. So, you could just sit in this trade, but what we like to do is we try to get add-ons. So let's look at some weakness. Let's look at the 5 minutes. So we've got a lower low here, which is can mean a pullback, but it doesn't show the lower high. Well, sorry guys. It doesn't show the lower high on the 15. This is sort of bringing the 5 minute into you guys. But look, you see, we've got a proper consolidation here. So it's really good to identify that, and so you have your eye around it. Obviously, you can have a look if it's just got a lower low there on the 15. It can sort of mean that probably had this lower high, but then we can sort of signify this as our 15-minute shock. And a close below this, we'd be looking to, continue to get in the market to short down to a target down here. That's where you get these huge trades, these add-ons. On the way down, you can play. You don't have to risk again the whole amount. Depends how much profit you're in. You could even, if you want to move your thing to stop loss break even, so you weren't doubling your risk, or put in 0.5 risk and 0.25 risk on the third, however many go down. But for these examples, I'm going to use the same risk on all if we do get them. Okay. Sweep. Nothing. Not a nice close. Looks like we're going overnight. We're sort of looking for a nice break and close here now, because we've had all these sweeps. Looks like we'll probably get it. We'll just see what happens. Okay. Moving sideways. Still waiting for this close. Let's pause it. Did we get anything? Don't think so. Absolutely not. Oh, there we go. Okay. So now we've got our 15 shock, I would say, personally, because we had these sweeps. Now this is the new low that we're trying to take. That's our shock level there. Let's see where we're trying to enter. See if this is already mitigated. Yep, that's a 45 mitigated. So what's next? Then mitigated, didn't break structure. This is nice. No sweep. Push sweep. Let me have a look, see if this one got mitigated. Okay. The only thing I don't like about this one is it didn't sweep anything, whereas this has swept, tapped into it. I think I might stick with that one. It's a nice sweep. There's no, let's go to 5 minutes. It's always good to check. Any imbalance above? No. Alright. Let's go back. Potentially what I'll do is I'll mark out both. So we're looking for the extreme unmitigated. So potentially it's this, because we didn't quite have the 45. Only got to 25. However, the fact that there's no imbalance below this, and this one didn't sweep liquidity, potentially this is what we're looking for. So let's line this up. And this could be, nothing here, nothing here. We swept some highs there, but no imbalance. It's all been filled. So potentially this is going to be nice. What time is that? 5:30. Let's get out the 5. Oh, so we enter on the edge. Okay. Perfect. This is where we're using the 15 and the 4 hour conjunction. Here we go. 13R. Massive. Let's clean it up a bit. That's what we're looking at. I'm really interested in this one. Because maybe this gets swept and we should have entered on this. But due to the fact there's literally no imbalance above here, I don't expect it to come into this one again. I just want to reiterate that to you. We go into the 5. Imbalance. It's been filled. No imbalance. Filled. Equal high. Swept all that. Very good structure. Let's see. I've been wrong before and I'll be wrong again. But I feel like that analysis is pretty spot on. Okay, we're in. And we would still be a bit nervous. We'd like this low to break. Otherwise, maybe we're just building liquidity. We'll sweep it low. There's a worry. Hold up. Pardon me. I just like to make these ones because you can go through my full thought process. I have these hard and fast rules that I'm following as well now, which is awesome. I know the win rate's high, so when we really stick to it, that's why I should love using the 15 to 5 minutes conjunction, because it's not always obvious on the 15. I love entering on the 15, but if you can wrap your head around looking for these same rules, there's nothing new, just looking for these rules on the 5 minute, you're going to have much more success. So this is how I class my breaks to structure. So this for me is a liquidity, potential liquidity sweep. Unconfirmed because we never broke any structure, but I don't take wick breaks. So I use this as my new low. A nice 15-minute break here. So that would be essentially, though, how I would see it as this is it on this whole break. This is the high of this 15-minute leg, and this is the low now. So this, I don't treat this as the high, but this here is flip zone, and this here is extreme. Okay, this is very tricky because the imbalance isn't directly above it. It's not like that's where the stop loss isn't going to be sitting up here. So I would actually take this short, because I want the imbalance. What I don't want is the imbalance. Like, say the imbalance was down. Like, if the imbalance was here, right above it, where my stop loss would be, that's when I don't like it. So I was a little bit slow on this one. I could get stopped out. Moving down, not that impulsively. I think this would be probably on the edge by a look at the size of the order block. Yeah, and I'll just move that up to the full. And let's see, might be the quickest stop out we've had. Yeah. There you go. I bet you, if we look at this, it's probably perfectly filled that imbalance. I don't mind. Just part of the process. Okay, so I really stick to it just below. Obviously, this is it came up and filled this anyway. Not a problem. Just how it happens. But I can't be worried about all these imbalances all the way through the legs, because it's just you end up not taking any trades. So lesson learned. Fine by me. Still in this one. Still in this one. Stopped out this one. Lesson learned. Let's just mark that out. Imbalance, and we can note that down in our data. So looks like we've just done a big liquidity sweep. Potentially, you could even say, if you really want to get aggressive, I just got stopped out this short. Let's have a look. I'm still expecting the market to go down. I want to get an entry. We've just had a big sweep of all this liquidity here. Take out people's stops like mine, and then we've just pushed the market down below the low that led to the high, which is my definition of a chock. So we put the chock in there. We've swept these highs here. We've got imbalance. We get led to the chock below. So let's see. This is the extreme. Was it filled 50%? Potentially. So I think I would look at entering off this. Let me just check the 5 minutes though. This is where the 5 minutes comes in a lot of handy. Imbalance still here. Okay. So what we're going to do with that knowledge, I'm going to take the extreme. It is much bigger order block. Maybe it's not as good risk reward, but it's nothing worse than getting stopped out of this one and missing the move. So we know what we need to do anyway. This is our 15-minute order block. We get our there, and pretty big one, 9.2. So we're on the 45. So pretty interesting. Our entry is going to be on the sweep of the flip zone. So very interested to see that. I just zoomed in so you guys could see. Obviously, with you guys, like we've got this many trades open. I wouldn't personally probably open this many trades at once, but I want to show you like everything that's possible. I guess it's only 3 because we lost this one. So, and you could move them down. Like realistically, you could be like, okay, stop loss above here. We've locked in some stop loss above here. Because we break above these highs and we're bullish again, something like that. But I'm just showing you what's possible with this strategy, because not everyone trades the same sessions. Maybe if you're in USA, this is your entry. You're in this one, entry in the USA. You trade London, you're entry on this one. So, yeah, one bit for everyone. Okay, we haven't got tagged in. Just drag it down. This would be... Ooh. Let's have a look then. Pause for a second. Now that we've played out, I almost overlooked this. I drew this out for a reason. There's imbalance, and there's still imbalance slightly above this. So, you know, in this case, I really like New York holds a lot, even with imbalances above. So I would still take it as I normally take it. But let me see. Of the imbalance. Almost broke my own rule. So we'll go to the imbalance as this there, and we'll add R5 there. It's kind of like an interesting way to do it. I haven't figured out the best way to trade the ones with imbalances above. Usually I would say no, but the fact that this is a New York, that these are very high probability trades when they've swept liquidity and broken structure. I would rather, you know, actually take this off the order block instead of trying to take like a real super sniper entry off the imbalance. So even though they do play out, that's just the way I'd like to trade these. Honestly, there's not much. Let me show you this. There was one other trade here. Internal breaker structure, or whatever you call it. Sweep of that. You know, this is probably like a nice trade off the flip zone as well. Valid, sweep, broker structure, imbalance. We never go back to it. And then, you know, people would be like, okay, this swept all this liquidity, I guess you could say, but there's imbalance above it. So not interested in taking trade off there. Potentially would still be interested. Nah. It would have to come straight back into this one and go, because there's imbalance here. There's too much liquidity line above it. It'd have to be like something like that. So flip zones I really only take on the most recent leg. Otherwise it's extremes. That makes sense. Really, this as well, we've had wick. So we actually haven't had a breaker structure here. It's all been liquidity. So we need a break and close below this for a breaker structure. All right, there you go. Zone. We didn't want that. We just had a break here. Well, actually, this was the whole entire break, so that's the high. We got imbalance above it. But the thing we got to notice as well is, see this low that led to this high that swept. We've just had a break below. So what we want to do is we want to keep looking for shorts in this area. I'm just going to mark up the discount premium. Yeah, perfect. So there is this. Didn't sweep. Let's up some liquidity there. Balance there. Let me see. I think I still like this one. New York, we cover the imbalance. And we write it down. Potentially we could look for longs up to this if they present themselves, if we get a nice chock above this. But let's see. Okay. This is our... There. Actually, hold on. I don't want that. I wanted that. Honestly, actually, I could do this. Even though this is the one that swept the low with the imbalance, I still would take the low. This is the unmitigated. So let's see. Long. Sorry, it's a bit slow on this. 6.6, so we go on the 25. And we're looking to aim up to this because that's where we're taking shorts from. Okay, it looks like we're in. Whoa, okay. That was quick. There wasn't even news. Super interesting. Let me pull this across. That's an awesome... What was that? Yeah, pretty much Frankfurt Open put us in after these sweeps are low, after a 15-minute chock. Or break of the low. I guess we broke this low, but we got 15-minute chock. This is our 15-minute POI. We're in on the 25%, like we said. Smashed 4.65. Easy. Beautiful. And that's how you do like a nice little counter trend trade. We've covered this imbalance. We're going to pull it across. It's really not really imbalance. It's just above here. So we put a bit of spreads on that. Yeah, let's go. Whoa. No way. That's awesome. Look at that. Pretty much just filled that last. Oh, it didn't fill imbalance, really. Let's have a look. Oh, yeah. We're in and off. Such a beautiful entry. This is what I mean. Really paying attention to these imbalance areas can, we could have entered off the edge of that imbalance. But the fact that, if we want to still order block strategy, enter off the order blocks, just cover the imbalance with your stop loss and give it a bit of room there, or even enter deeper on the order block and then cover it, if the imbalance is too much. So here we have huge dump, swept some lows. When we get a sweep like this, I always like to look to see if there was maybe like a 5-minute chock, because often you don't get 15-minute chocks on these really fast sweeps that happen. So I would probably take that as a nice chock. And so I would look at the point that swept it. This is like a little bonus for you guys. It's something I'm working on, a sweep entry. If you didn't want to take this, problem is sweep entries happen so fast that you need to use the lower time frame to get in generally. Otherwise, it's going to run away from you quite fast. So I'll show you this one. We got on the 5-minute. We had the last break of structure that led to the high that led to the sweep. We then had a 5-minute chock on this. We've now got the point of interest that swept liquidity, that pushed down. It hasn't been 50. I would normally take this one, but it hasn't mitigated this by 50%. I'm going to move. Oh no, that's the one I want. Just move this one across that we're already in on. Yeah, you can go off the 5-minute order block like I have here. Or after that 5-minute chock, you can just go back to the 15, enter off the 15. I'll show you that as well. So we know there's a 5-minute chock. That's fine because we had the sweep. Liquidity's gone. 5-minute chock, weakness. Okay, we had some sweeps here. But confirmed 5-minute chock, huge imbalance coming out. You could even just, if you wanted to, enter off the 15. Let me just line that up. Perfect. And this is sort of like a confirmation entry. Let's see. Yeah, so we go to 45. Oops. Okay, and we're still targeting these lows. Let me bring this in. Bring this in because that was our one and only trade here from that. And I'd actually want to see, I'm going to note down what this rejects on the 5 minutes to see if it does. Seems to be building up a bit of liquidity there. Maybe for New York to take it. Okay, let's stop for a second. Let me have a look. Oh, no way. Let me zoom in. Sorry, guys. The 45 is here. We wouldn't be in. Okay, that's pretty annoying. Oh, really annoying. Let me go to the 5-minute quickly, guys. That is frustrating. Because you know how I was saying we take the chock on the 5 minutes? I really want to see what we rejected for here. Wonder if we would have, been played. So that would have been the 5 minutes here. Let me have a look. We would have, size of the order block would have been 8.5. So yeah, no. Let me go back to the 15. Honestly, I'd like to look at the FTMO because I reckon this probably would have got tagged on FTMO being that close. But all good. Such an unfortunate miss. I'm going to check that on my broker as well. I want to compare as well to get accurate data. But, that's just how it happens sometimes. So what we could have done is, here again, we've missed. Then we've had a fail of the high. So then we've broken. We wouldn't have got an entry anyway. Next sort of area we would look for is now we've got the break here. Realistically, we have this, but then we've got the imbalance above it. We probably look at this as the unmitigated extreme. So there we go. $6.1. Go to 25. Same thing down here. What do we got? This is on Wednesday, 8 p.m. Oof. Okay, yep, didn't really have much effect. I didn't want to. Oh, okay. Wasn't really anything on offer. Maybe that, but imbalance above this, but sort of. Hold on. It's a huge sweep to sweep those. Just not a significant spot for me, so I'll keep this and we'll see what happens. Well, realistically, actually, huge sweep. All this line liquidity here. The way it's setting up, I would be happy to take this. New York imbalance. We've got some internal broken structure here. Huge sweep of liquidity. No resting imbalance. Okay, a bit above here, but we've got enough liquidity here for it to take, so I might not hunt that. It's going to be a short little scalp, because let me just pull the week low across. $4.6, 3.2, yeah. And go. Let's see. Be interesting in this place. I like the setup. Doesn't have to play, but it ticks all the boxes. If we cross this before we come to it, then I'll remove this. Yeah. Okay. We've now taken this liquidity here. Yeah, not really interested. What do we have? We still have a bit of imbalance below, hey? This would be risky taking this, but because we've taken this, but we could push down and take another look. No, that we stopped out. Okay, so we've done that. Let's have a look. We're deleting this, that missed, win, loss, win, win. Epic. We'll mark those up later. Let's just keep moving forward. Okay, so we've still got some imbalance below here. We've got a nice change of character. However, we did also have like a 15-minute break as well on this 15-minute low. So technically, we need to have a look at, probably need to have a look at the 4 hours too. So let me just have a look. Premium discount. This is an area, interesting area. And it is the extreme of this leg. I have this break here. We've now taken the low. I'm going to have to look at the 4 hour. That doesn't reveal too much. Okay, we've closed the sweep. Still in balance there to fill. Tricky. Very tricky. After that 4-hour low sweep, I'm not really that comfortable taking any shorts. So, or these longs, in all honesty. I think these lows will be swept again. What we could do is, here's your chalk. Let's try this again. Here's our 15. Extreme. This is our flip zone, but we've got imbalance right a bit below it. What I'm going to do, line up this. We'll take it a bit deeper. Oh, I can just play this as normal. Oh, shorts. Longs. $4.5. Let's have a look though. We got this. Because we're going to cover the imbalance. 7.8. So we will move that to the 45 line. Actually, that's a really good way of doing it. I'm just playing around with this. Because I hate not entering when there's imbalance below. Because a lot of the time we have the direction correct. It just has a little sweep. So let's give us that. I think conservatively we would target here for a big 10R because, that could be where the next short comes from. But I'm not that comfortable taking a short from there because we've now broken that 4-hour low and swept it with a 4-hour. But, I think this is realistically, if this is a sweep, hold on a second. If this is a sweep, technically we could be targeting much, much higher. But because we haven't confirmed breaker structure, we'll be with the next really valid 15-minute area of supply. Okay. Interesting. What's the bet? Like I said, the flip zone's held so far. Maybe I should have done what I did there on the extreme on this one and covered the imbalance. But let's see. Okay. Whoa. Could have probably got a bit of a trade out of this one. This was valid. New York, swept liquidity, broke structure, very high probability, imbalance below, imbalance doesn't fill, all this. Let's have a look what you could have scalped on that. 6.2 on the 25. 5.1. 7R. Yeah, let's leave that in there because I was interested in taking that one. Let's see if it does actually play out. Realistically, we did have the 15-minute low. If we're playing on 15-minute structure, that was valid. However, that did play out. Very nice. Swept that low. We would have been tagged into this, actually. Yep, easily tagged in. Filled a little bit more of that imbalance. Swept the low on the 15 that we're looking to break. Let's just go back to that 4 hours that we're looking at. Because like I said, we had that. This is what we were looking at. We had this break. We pushed back up. We rejected here on that short. We had a 4-hour sweep. Unconfirmed sweep, but with imbalance still left below. However, as we took that low, if we go on the 15, I'll turn this on so you can see it better. As we go into the 15, we had a confirmed break on the 15, which means we're continuing the 15-minute downtrend. So what I was showing before is we took sorry, it's getting so messy, premium discount. This is in the discount area. It's the extreme of an internal that swept liquidity, still had imbalance, unmitigated, all of it ready to go. We were looking to enter on this one, but we knew we could take the lows, more imbalance there, so we're targeting the low to keep the 15-minute structure going. I should have taken that risk entry. I know these are even higher. I think with New York, there was with all the things ticked, I think there was 3 losses out of 50 trades or something like that when all the boxes were ticked on New York with 15-minute trend. So we'll keep that one in there. We keep this one on, obviously. We could have probably even entered off the sweep, but as this was an untested shock, we could have easily, what we would have done actually with the short is we targeted this. We target the OB. Okay, so give us a second. Perfect. Okay, so we've now had another sweep. We're in this. We've swept. Like I said, I'm going to turn. We want to break this high. We had a nice sweep. Let's see if we had a chock. Perfect. 5-minute chock. Like I said, when we get a 15-minute sweep, a 5-minute chock is fine. Okay. So let's go back on the 15. We take our 15-minute area of interest. I'm going to turn this off. It's getting in the way. We've swept these lows. 5-minute chock. I guess I can turn this on. We're targeting. Let's see if there's any unmitigated areas of interest up there. Let me see. I think this one was mitigated, was it? We go on a 45. Yes, it was. So essentially, we're just looking to take the highs. If we get into a trade right now. However, we have this. However, it's not a strong high as we haven't had a close below. So, right, it didn't lead to a break of structure. So yeah, we target the highs. I was getting confused there. How big is this? Oof, 13.8. Go to the 445. Actually, no, 13.8. Let's see. I want to show you something. We go on the 5-minute. If we're above 10. What's this? Yep, we take it off the 5. Okay, we go back to the 15. You can also, if you want, I'm still experimenting with the really big POIs. If you want, you still take it off. It's pretty similar. If we took it off to 15, maybe for the sake of this, I'll just anything over 10. I'll go off to 4.4. This one, till I have solid data on it, and that's we're targeting that 15-minute high. What day are we on? Thursday. So I think we're gonna have to hold this one through till the next day. We could probably scalp out of this, but because we've already swept these lows, I think it's low probability because it didn't lead to a solid break of structure. If we were still sitting around here and we haven't taken all the lows, then I'd see it as a valid chock, and a lot of liquidity grab. I reckon there's probably like some sort of reaction we get from it, so let's keep an eye out. Essentially, we're thinking it's going to come back here. It doesn't have to. We would still have our entry there. So pause. All right. Move that back there. We'll just still be in. So if we dump down to here, potentially what you could have done is waited for a valid chock. But just like sort of low probability here. All right, there we go. What was that? Oh yeah, non-farm payroll. So no wonder there was a whole mess. Didn't look like we got tagged in here. We still had all this imbalance. So, it looks like it bounced off this one. We had imbalance below, so potentially we were still looking for the extreme. Don't really think I would have had any trades here. Let me have a look again, but no, I didn't like anything. We moved, rejected from this area down, and then we had some push up, but still so much imbalance here. I'm not going to enter non-farm payroll. Could have easily swept everything and pushed us up. Thing I do like now is that that was our original target. We've now broken all this high that swept our low, so it's a nice little break of structure. We've got a huge flip zone area here that swept liquidity and has broken structure. Whether we come back to that or not, it's something I would mark up. And still 11 at 50%. Anyway, as long as it's enough. 4.17. Can't complain about that. 4%. Oh, wait. Let's see. Nah, going to keep moving up. Next area I'd look for, so we've got this breaker structure here, but we also have internal here. Internal's, pretty big one, what we're looking for. This is that flip zone. Swept liquidity, had a lower high, lower low, imbalance, led to breaker structure. This is our valid one as well. We'll take this too, but this is the immediate next bullish order block. Let's see if we get tagged in. And actually, I'm going to zoom out at this point to look for areas of interest. We've pulled a few across here. 4-hour point of interest. That was our old 4-hour strong high. I'd say this 4-hour point of interest that we front run before is what we'd be targeting. Okay, let's zoom back. But yeah, not long left. I doubt we're going to get much going on here. So I'm just going to try to zoom in again. 6 p.m. on a Friday, it'd be more like I'm not trading anymore. Going out with friends, going out with my wife, doing something, not being on the charts. Non-farm payrolls happened. Very unlikely when I get a pull back into this area and push up in the last few hours of the market. So we'll mark it up. You never know. Yeah, looks like. Yeah. All right. I think that's pretty much done. 9 p.m. Market's closed. All right, perfect. That's a pretty cool week. It was me, following. We'll release this after I release my next video. And you can look at the last video I released that explains the strategy, the order blocks, the rules around them. But I might attach this or link this in there because this really shows you the power of it and me trading that exact strategy so you can see it in real time. So thanks for watching. I'm going to tally all the results up and I'll attach it to the end of this video. And yeah, hope you enjoyed that. Stick around. Perfect. Tallied up all the results. So let's go over it. Quickly, totals. We got 7 wins, 1 loss, 2 missed trades by, you'll see, fraction of a pip with a total available of 77R. Risking a percent, 77%. Insane. Just showing you what's possible. There's a couple things I'll explain because obviously I want to have realistic results. But yeah, this is what's possible. If you're super aggressive, you can get this. However, obviously I want to be realistic. We've entered this trade. I would probably enter 1 more. I'm not going to be writing 3 down, so maybe this last one I probably wouldn't have taken. Maybe 67 realistically. But, just want to be fully transparent. But let's go through them. This first one we missed here. What did we miss? By 0.6 of a pip. It happens. I've done the best I can with backtesting the entry criteria. However, it is what it is. It was a pretty aggressive trade anyway. This is the one we're looking for. We had the imbalance below. This one broke structure. It's the extreme of that leg. Got the liquidity here. We're waiting for this trade that did play out. However, as we got the rejection and the failed run of the highs and then the breaker structure here with a nice sweep on New York, we figured that this was the start of a pullback to the discount area. So what we were looking for was to take a trade out of this area, this last extreme zone that's got liquidity, left balance and broke structure, just down to this area of the discount zone where we essentially expected pullback to finish and us to push higher. As it did play out, unfortunately, we weren't in it. So then the next one was, okay, our pullback is complete. Once we have this trough level, we got our trough after retracing a bullish impulse, retracement down into the discount area, bullish trough, looking at the flip zone, which is the last consolidation, value consolidation before the break of structure. If you go on the 5 minutes, it looks super clean. We had the sweep liquidity, imbalance, everything. And we riding that up to pretty much our entry of what we wanted our major entry to come down. Which we did happen quite fast. We get tagged into the short that we were watching. That one's quite a long trade. I told you now that I've backtested so much, I'm going to start holding my trades overnight because I know that if you're your 4-hour trend entering on the 15-minute time frame at the extreme, very high possibility that you can ride these trades all the way to your level. We did see we just got a wick there, so sometimes it's good to even just front run these levels or look for like the last bit of demand at the bottom just in case we do start ranging and get a double bottom. So if you are looking to hold overnight, sometimes it can be a good idea to just front run your area a bit because there's potential that we come down here and then we come back up here and then we come back here because we never know we're ranging until we've been in it a little while. So that's just a little pro tip which I will put into place for my overnight trades for sure. And then the next one was just a continuation trade. But once we swept the high, we got this chock. Okay, this got mitigated straight away. We weren't able to get in that due to the fact that we would have had to enter on the 45, and oh no, yeah, sorry. It's because what happened, we just had wicks. We were looking for a body break. We never got that until here. This had been mitigated already. We were looking at this, but it didn't sweep liquidity, and so the last unmitigated point of interest that swept liquidity and broke structure with imbalance was this one here. So we took that as well. Same target. We're going pro 4-hour trend, pro 15-minute trend. So we target a 4-hour lows. The next one we took was a loss. It was a bit of a risky one. We did have the imbalance above. However, it ticked all the other boxes. We had our sweep, our imbalance there. The thing was the balance wasn't directly above. So for me, it was a valid entry. Potentially what we could do next time, like we will see down here, is we could pull our stop loss above the imbalance, and we would have been in and been able to ride this all the way down. Unfortunate loss, but it happens. So then the next one was looking at, this is where it got a bit sneaky because it filled part of this imbalance that we had left here, but still left a bit behind. So it was a really nice valid order block, swept a lot of liquidity in New York, which makes it even higher probability. Broke structure, it's the extreme. So had this tiny bit of imbalance above. So what we did was we included that imbalance in our analysis and then gave ourselves space on top of it, as we do for spreads. The wick almost came perfectly to fill that imbalance. Swept a little bit of liquidity, stopped out anyone that had tight stop losses, and then the market moved in our direction. So it's really good to note that this is what's really come in handy, these months and months of data, really actually going back and collecting all an Excel sheet and seeing the percentages and what actually caused the main losses in here. And this is something I really did identify here. Unfortunately, what we had is what we talked about. On these sweeps, a little extra tip that I haven't fully released to too many people is I love to enter on the 15, but when we get these sweeps of liquidity, the market tends to move very impulsively, and often you don't get a chance on the 15 to wait for the chock, because by the time that happens, the move is already half done. It's not always the case, but so if there's a nice 5-minute chock like we had here, I'm happy to use that as enough confluence with liquidity's taken, a nice 5-minute chock from the backtest node done. It really comes into play. 15 and 5-minute for me are just amazing time frames for this strategy. So unfortunately, I missed that one by 0.3 of a pip. I even checked my broker, and it would have been pretty much a miss as well, unfortunately. But as you can see, would have been, hold on. Yeah, this is where we would have wanted to enter. Yeah, unfortunately, we missed. Played out perfectly, just the way the cookie crumbles sometimes. Good to see, 5-minute chock with the sweep is a great combo if you don't get that 15-minute chock, especially if it's pro trend, pro 15-minute trend, pro 4-hour trend, even higher probabilities. Anyway, so we moved down. We're still in these trades, holding them overnight. Like I said, probably this one would have been the same, maybe front run a little bit. However, this is a big confirmation that we should reach our target. So I guess, start a Australian Asian session the next day. We would have smashed our take profit, and pretty much what we were waiting for. Oh no, we got our chock. Yep. This was our last extreme. This was something we were umming and ahhing about, but I kind of got caught up in the fact that we had taken this 4-hour low, but we had also broken a 15-minute low. So what I showed in the video that we had to take this as we're still 15-minute downtrend. Okay, we've taken some 4-hour liquidity, but doesn't mean, this can just mean that we have a bit of a pullback. So now we drew in our premium discount area of our last area of New York that swept liquidity, pushed down with imbalance, led to the break of structure, confirmed with a body breakdown of the low here, and it was unmitigated. So this, we should have had pending order on it, 100%, no doubt, and it played out perfectly. What we were doing, though, is we would have front run, because we're looking to long here, out of this chock, unmitigated chock level with imbalance here. We would have taken profit on the edge of this and had our long entry here. As you can see, we still had imbalance below. So what we've done is we included this imbalance as part of our order block and gave in some, our distance of spread on below. And it has swept the low slightly. So if we had a type stop loss, we would have been out there. However, we didn't. And this trade played out to hit our target at the 4-hour high. Because why we target the 4-hour high is because there was no, oh no, hold on a second. There was no, we would have not targeted the 4-hour. Sorry, I got confused there. 10.5. Yeah, no, we weren't targeting the 4-hour high. That was this next one that we wanted to target at the 4-hour high. This one, because we entered it here. Let me move across. Sorry, I'm just going to delete this because we didn't get the entry on that. That's why I got confused. Sorry about that, guys. On girls. So we wanted to enter, we were looking conservative to just hit this target here. So I actually got that wrong. So it'll be 9.5. Let me just fix that up for my data. Perfect. Yeah, the reason we're targeting this, the last point of interest, especially on New York, swept liquidity, pushed down, did get a small amount of chock here with imbalance below. However, this leg didn't break any structure. So for me, it didn't have criteria of a short, going short, like a risk short. But I know that, we don't need all of these criteria to be present for an order block to hold. It just means it's high probability. So I'm happy to target this order block here and take profit there if it fits my analysis, because I know for a fact we could reject here and we could push all the way back down and get another sweep of these lows, especially with the balance left below and all that type of thing. We didn't in this case. We kept pushing up. However, you just have to trade with the probabilities. And I think that's what a lot of people forget. And that's why I have rules, strict rules. Potentially if we hadn't come down and taken this liquidity yet, and we were still trading like this was the chock here, then potentially I would be more interested in taking a risk entry there, because we wouldn't have hit my target. See, if I had this trade short, my target would have been these lows. However, we already had hit the target on the trade, so there was no liquidity left to be taken down here. So we're looking to hunt something high and clean up all these stop losses that have been left behind, if that makes sense. So that's a bit more detail for you. We didn't get anything. It moved very impulsively as expected. You think about it, we had these highs left over, stop losses here, stop losses here, stop losses here, here. So, pretty much just like if there was any orders left here, not closed out, just big liquidation events. All these stop losses, all these sell orders turn into buy orders, and just you fuel the market pushing up. So we didn't get any pullbacks enough to get into any trades on the Friday. Thanks, guys, for watching. If you want to learn more and become consistent, profitable traders, then subscribe, like, comment. Let me know what other pairs you want me to test a strategy on. I know it works super well on Euro USD. I'm playing around with USD, Swiss franc, and AUD USD. At the moment, I don't have any fully solid results to share with you just yet, because I want to give you the best and quality results that I can. However, I'm going to be releasing much more detailed videos in regards to market structure, regards to top-down analysis, different sorts of websites I use to get the news, and different sorts of indicators I use. So stick around, subscribe, and like. Helps me out and keeps me motivated to keep these videos coming. So thanks for watching again, and I'll see you all in the next one.